Hey everyone, in this video we're going over Activision Blizzard. Yesterday on their third quarter 2021 results, they dropped 15% and I deployed $500,000 into the stock because I think it is trading at quite a discount. Now before going over the numbers and the news, if you could smash the like button, it really helps the YouTube algorithm, and if you haven't subscribed to the channel, definitely subscribe. Now when looking at the chart yesterday, you could see basically we had a flat drop right after earnings. Basically, the stock dropped down about 17%. It made its way up a little bit. It was down about 14 to 15% by the end of day yesterday. So down at the point of this screenshot, $66.77 a share. This stock was trading around $80 literally a week ago, a couple days ago. So it was quite a drop. And the headlines were filled with things like Activision Blizzard stock's worst day since 2008 after game delays. Activision loses Blizzard's co-leader, delays launch of Overwatch and Diablo, and as well we saw Activision Blizzard earnings beat expectations on bottom line but a miss on Q4 outlook, so going forward. So let's start with the update on their pipeline, and I believe this is the main reason the stock dropped. They said that they basically have worked with new leadership in Blizzard and within the franchises themselves, and it became apparent that some of Blizzard's content that was originally planned for next year would benefit from more development time to reach its full potential. So they're still planning to deliver a substantial amount of content from Blizzard next year, and they're planning for a later launch, though, for Overwatch 2 and Diablo 4 than they originally were planning. So basically, they are pushing back these two big games that were supposed to come out in 2022, and now it looks like they're probably going to come out in 2023. But they don't even say 2023, they just say pushing it back, basically. They go on to say that these are two of the most eagerly anticipated titles in the industry, and their teams have made great strides towards completion in recent quarters, but they believe giving the teams extra time to complete the production and continue growing their creative resources to support the titles after the launch will ensure that these releases delight and engage the communities for many years into the future. And by doing this, these decisions will push out the financial uplift that we had expected to see next year. But we are confident that this is the right course of action for our people, our players, and the long-term success of our franchises. So basically, instead of this big, financial successful 2022, it might not come till 2023. Now, between Activision, Blizzard, and King, the company has 390 million monthly active users. Now, that's a massive amount of users. The only thing about that is it is down from last quarter. Last quarter had over 400 million monthly active users. So it's something to keep in mind. Ton of users, but still down from last quarter. We do have some interesting things coming, like Activision has a new Call of Duty game dropping, I believe today or tomorrow. And Activision alone as a company has 119 million monthly active users in the third quarter. Blizzard grew by 20% year over year, so Blizzard had a great quarter. 26 million monthly active users for Blizzard. King grew revenue by 22% year over year, which is a new quarterly record for them. Very strong quarter for both in-app purchases and advertising, they point out, and they had 245 million monthly active users. So obviously mobile is a huge business for Activision Blizzard now that they have King, and it's not surprising that they are pushing more mobile products through Blizzard and Activision, seeing how successful mobile can be, not only from a profit standpoint, but just the sheer amount of users that are on mobile gaming versus console gaming. Now let's dive into these third quarter 2021 results. So on the left side of this chart, you see Q3 2020. All the way to the right, you see Q3 of 2021. And in the middle, it's talking about the outlook. So in Q2, they said, how did they think they'll do in Q3? And that was their outlook back then. And basically, we can compare how did they actually do versus what they forecasted. So first, let's just start with the revenue. So for Q3 2020 last year, they had revenue of $1.954 billion. They expected basically Q3 2021 to be $1.97 billion, and this was basically their outlook as of last quarter. And it turns out they actually did over $2 billion this quarter, Q3 2021. They did $2.07 billion in revenue. Now, as far as operating income, a year ago, they did $778 million in operating income for GAAP income. And then for their outlook, last quarter, they thought Q3 2021, didn't give guidance for the operating income, what it would be, but they thought the operating margin would be 35%. It turned out the operating margin was 40%, and their operating income this quarter was $824 million, which is a nice rise from $778 million a year ago in the same quarter. Operating margin stayed the same as a year ago. It was 40%. They thought it would drop to 35%. It stayed at 40%. As far as EPS, earnings per share, GAAP EPS, was 78 cents a year ago in Q3 of 2020. They were expecting it to actually drop to 64 cents. So they obviously are conservative with guidance, which I like in a company to be conservative and then beat the guidance. Their EPS came in for Q3 2021 at 82 cents. So not only did it beat the guidance, but it actually was higher than a year ago when they thought it would be lower. Now, net bookings a year ago were $1.76 billion. Net bookings turned out to be $1.88 billion for this quarter. When it comes to the balance sheet and cash flow highlights, they delivered in Q3 operating cash flow of $521 million, more than double the year ago level, driven by lower cash taxes and favorable working capital movements. So as far as cash and cash investments, they had in Q3 of 2020 a year ago, $7.6 billion. That has risen to $10.02 billion in Q3, up from a quarter ago at $9.64 billion. So their cash is growing because they have nice free cash flow, which makes quarter by quarter their cash balance go higher and higher, which I love to see in a company. When it comes to the debt levels, it has stayed the same. A year ago, it was $3.65 billion in gross debt. The debt levels remain today at $3.65 billion, but the net cash, when you get rid of debt and you take how much cash they have, it is up substantially. As far as their net cash in 2020 of Q3, it was $3.95 billion. That's the $7.6 billion subtracting the $3.65 billion in debt. It is now $6.37 billion, so a huge rise because their debt stayed the same, but their cash has been going up because of their free cash flow rising. In Q3 of 2020, they had free cash flow of $170 million. Their free cash flow this quarter was $500 million. I mean, it's a really high free cash flow, more than I was expecting, more than I believe they were expecting. Third quarter 2021 segment results, if we go segment by Activision, Blizzard, and King individually, for net revenue, Activision had $641 million, Blizzard had $493 million, and King at $652 million. So the highest revenue is King, then Activision, then Blizzard. When it comes to operating income, it's even more so on King's side. They have the highest margins. Activision had $244 million in operating income. That represents 38% operating margins. Blizzard had $188 million in operating income, representing also 38% operating margins, and King at $303 million in operating income with 46% operating margins. Now, as far as key drivers, Activision basically says year-to-date net bookings for the Activision segment and Call of Duty are higher year over year. For the quarter, Activision revenue was lower year over year, as expected in their outlook due to the launch of Tony Hawk's Pro Skater 1 and 2 in the year-ago quarter, and declines in Call of Duty upfront and in-game net bookings against a quarter that benefited from shelter-at-home mandates, and the early ramp of Warzone. As far as Blizzard revenue of $493 million grew 20% year over year, driven by successful launch of Diablo 2 Resurrected. Year to date, net bookings for Blizzard and World of Warcraft, its largest franchise, were higher year over year. And when it comes to King, revenue grew 22% year over year, driven by another strong quarter for Candy Crush. Segment in-game net bookings grew in the mid-teens year over year, while advertising grew approximately 60%. The team's strong execution across live operations, marketing, and advertising drove records for both revenue and operating income, both for the quarter and year to date. So basically, Activision, Blizzard, and King all performing well, all having nice operating income, nice margins as always. And we're basically just looking now into the outlook. And I think this is part of the reason that the stock is going down. We know these new games are being delayed, which makes that the next couple of quarters don't have as great of a future as people expected. But as far as what the company is giving as far as guidance going into the next quarter, they believe that the revenue is going to come in over $2 billion still, $2.02 billion in revenue. They believe the total year will be $8.66 billion in revenue. As far as their operating margin, they believe the next quarter is going to come in at 30%. Now, personally, I don't think it's going to be 30. I think 35 to 40 will be more likely. I think they are being conservative in the guidance with the hopes to beat the guidance. When it comes to EPS, GAAP EPS is expected to come in at 54 cents for guidance for next quarter, and non-GAAP 62 cents. For the entire 2021 year, they're expecting $3.27 of GAAP EPS or $3.70 of non-GAAP. As far as net bookings, they're expecting $2.783 billion in Q4 and a total net bookings of 2021 of $8.65 billion. Now let's look at some valuation metrics. Historically, the price to earnings for Activision has really been over 25 for Activision Blizzard. It's at some points have been even over 100 if you go back, if you look at a 5-year chart. But in the past year, we just dropped under 20. It has never been under 20 in the past year. I don't even think in the past 5 years. It's usually around 25 to 35. So I think at a price to earnings valuation metric, we are looking fairly cheap. And I think it's because they're expecting the PE to go higher if earnings come down lower, obviously, going into the future quarters without these new games. But if guidance is just being extremely conservative and we do see great earnings, then this is a super cheap valuation. And if it's not, we're just talking about regular PEs that it's had for so many years anyways. When it comes to price to sales, Activision has come down from basically around a 10x sales to about a 5.8. Now, 5.8 times sales is still a high number, but for a company like Activision Blizzard with great growth, I don't think it's that bad. I think it's a pretty fair price to sales ratio, and it is lower than it has historically been. Now, for 2021's outlook, they said themselves that for this full year, they're expecting $3.27 of GAAP EPS. I expect them to actually beat that number. I think they are being conservative for Q4, and I think it's going to be higher. But let's just say they're right. It's $3.27. Well, with a PE of 25 on that $3.27 of earnings, you get a fair share price at $81.75. 25 times $3.27 of GAAP EPS gets you $81.75 share price. So the stock is trading at $66 and change when I made this slide. It's not much different at this point, I believe, during the recording, but basically under $70, in the 60s, high 60s. Now, I just think if you're getting the stock at a great valuation like this, and under 20 PE, it is a good time to pick up the stock. And I think it's not going to stay at this low of a valuation for long. This is a company that is one of the leading gaming companies making some of the best console games, and the gaming industry is a very fast-growing industry and is taking up more and more of people's time than ever before. So I do think getting into this stock for the long run, I'm not talking about flipping this on a trade. I'm sure there are trades you can make with it, but I'm talking about owning this stock for the long run. It represents a good opportunity right now, in my opinion. Now, the $81.75 share price is what I believe it's worth today, not what I believe it will be worth in a year or 2 years from now, or 3 or 4 or 5 if you're a long-term investor. So I think getting in at 66 is a great price, and that's exactly what I did. I did buy this stock today, and I'm going to go over my position. I'm going to show it to you just to be fully transparent. I don't like to show too much, but in this case, I did purchase 7,000 shares. I paid $66.12 a share. Purchased this in after-hours market last night. If it continues to drop, I'm willing to build this position up to about 10,000 shares. Normally, I'd like to dollar cost average into a position and not just buy so much right away. But with such a big drop, the biggest drop it's had since 2008, I just felt, there's a good chance this stock comes up to a more reasonable level quickly, and I don't want to miss out. So I built up most of the position I'm willing to have fairly quickly in a single trade. Now, thank you for watching. I'm curious what you think of Activision Blizzard. Definitely write in the comments if you like the stock, if you own the stock. Like this video if you made it to the end. I really appreciate that. It really helps with the YouTube algorithm and my channel, and I am a new channel fairly. We haven't been doing this for too long. And if you haven't subscribed, definitely subscribe. Until next time.